Welcome back, everybody. In today's episode, we'll be looking at TSLY and determining if this is an ETF that you should own. I've read some articles lately and I've seen some videos of people sharing their opinions on TSLY, so I figured we'd do a breakdown here. Now on this channel, we really only care about the facts and not opinions, so keep that in mind as we proceed through this video. Let's get going. Alright, so let's start off with our portfolio update. We're currently sitting at 669 and we have a return of 0.31, and that's mostly because of our earned dividends. Now if you're new to the channel, what we do here is we invest $10 a day into high quality dividend growth stocks. Now that's important to remember as we go through this video. Now in a previous episode, I said that I would be introducing a quote of the day just to keep things interesting and keep it loose around here. So the quote of the day is, opinions are like butts, everybody has one, and they usually stink. Someone said it, I don't know, it's an old adage. Let's get into TSLY. So here we are at stockanalysis.com, and we're going to review TSLY, but how we like to do that on this channel is I like to go over the good, the bad, and the ugly. So let's start off with the good. TSLY currently trades at $14.50, so I like that it's a low price. The next good is that the dividend yield is at 50.74. Guys, that's a huge dividend yield. That's literally 24 times the average yield of my dividend growth account. So 50% is monster. The next positive is that you would be involved with Tesla, since this whole ETF is involved around synthetic covered call options for Tesla. And lastly, I'm going to compare this to the S&P 500. I want to do it to the year to date, okay? TSLY is up 8.29%, and the S&P 500 is up 16.68%. So an 8% difference, I don't think that's bad at all, especially when you have that 50% dividend yield. That monster dividend yield really kicks into effect here. So let's move on to the bad. The bad being the expense ratio is at 0.99, basically 1%. I like to see it at 0.5% or lower, so I chalk that up in the bad column. The next one is that TSLY, I'm going over here comparing TSLY to Tesla. TSLY year to date, like we said, is up 8.29. Tesla's up 147.44, so it's lagging in price severely, okay? And then the next one, the next bad, is that it's new. And I know that doesn't really play into effect with everybody else. But I'm one of those guys where, I see a new truck, a new car come out, and I say, wow, that looks really cool. I really want that. But I know I shouldn't get it. I see the new phone come out, and I know I shouldn't get it. Because there's always problems with things that are new. You got to work out the kinks a little bit. So I think that's a little bit of a downfall here for TSLY. Now let's get over to the ugly. So the ugly, if I go over to their holdings, you can see here that you have Tesla call options. Basically half the portfolio makes up of Tesla call options. So you're not actually owning any of Tesla. I hate that. I hate, even in all my other ETFs, VU, SCHD, a little bit of ETI, whatever, you're owning the companies, but with TSLY, you're not actually having any ownership of Tesla. So I think that's really bad. I chalk that up as an ugly. Next, the ugly, I said it was a good. Well, to some of you, 50% dividend might be good. A lot of people are jumping for joy. But for me, that's ugly. So I have to view it in both ways. I can't just cater the whole thing to myself. The world doesn't revolve around me. So I think that for me, it's ugly that it's above 7%. I like the dividend yield to be below 7%. At 50%, you are obviously well exceeding that. And the next thing being is that it is very inconsistent. If we go over here to Seeking Alpha, we can look at their dividend history. Now, this is obviously very inconsistent. So I want to get into who should invest in TSLY. So this is coming right from here. I just went right to YieldMax ETF's website. You'll click on this, the prospectus, and it'll lead you to this, and you can just scroll down. This is on page 2, and it says here, let me blow this up so you guys can see this. So it says right here, so remember, we're going over who should invest in this. So who should invest in this? The fund's primary investment objective is to seek current income. So let's go back over here to Seeking Alpha. As you can see, they're paying these dividends monthly. I think it'll even tell you here on stock analysis. Let me see. I don't think it says it on here, but they do. They're paying these dividends monthly. So right here, they have it exactly right. They're not lying to you. They're not trying to fool you. They're saying, if your objective is to seek current income. So who might that benefit? That might benefit someone who wants cash now. That might benefit someone who wants to utilize a drip where you take your money or your dividends that they're paying you, and you just put it right back into your portfolio. It doesn't have to necessarily be in TSLY, but it could. So you can just keep raising your capital in TSLY and get higher dividends if you feel like doing that. It's for higher risk seekers. It's for people who don't really care about the stock price as much as the dividends. That's that high risk. If you want to pad your dividend yield, guys, hold on a second. I want to go over to M1 Finance and show you something. Let's go over there. So here we are on Mount Finance, and we're still talking about who TSLY could be for. But I wanted to show you guys this because I think it's interesting. So the average dividend yield of all of my holdings here is 2.06, and it fluctuates a little bit because of these targets here of the percentages that I have in each holding. But if you want to, if you're somebody who has to see this number be, your target is 5, well, just play with it. Add TSLY in here, and you'll be able to easily hit your 5 because the dividend yield is 50.74. So all you have to do is just add it in here, and you'll be able to easily hit a 5, a 6, a 7% if you want. And you won't have to go very high in allocation for your target percentage for it. So I think that's a little bit of a cool thing about TSLY. And is it for me? Is it for the people who are going to kind of follow what we're doing here on this channel with dividend growth? It's probably not for us, okay? But if you're someone, like I said, who needs to see those juiced up dividends and you have targets that you want to hit in your portfolio, then absolutely, by all means, go ahead. I'm not a financial advisor, but if you want those juice up numbers, go for it, okay? And I said earlier that, opinions, they're like butts. Everybody has them. Well, it's true. And they don't really carry a lot of weight, but the facts are the facts. We went over and we looked at the expense ratio, which was high. We looked at the dividend yield, which is high. We looked at the inception date. It's a very new ETF. And we looked at the price. It's $14.50. We looked at you're involved with Tesla. You don't own any because we went over here to the holdings and we told you don't own any. You own none of Tesla. These are all just synthetic call options here. Okay? We looked at Tesla compared to the S&P 500. We looked at TSLY compared to Tesla. And then we looked at their dividend history. So this right here shows you on our channel, this doesn't play. This isn't playing on our channel here. This isn't dividend growth. But I have one guy in the comments, I forget his name, but he commented about TSLY. It was on my SCHD video. And he was saying, I love TSLY because I'm a dividend pirate. And I laughed at that. I genuinely laughed out loud because that's hysterical. And that guy has a goal. And he calls himself a dividend pirate. So if that's for you, absolutely go ahead. I fully support you if that's what you want to do and that's your game plan. But it's not for me. Thanks for watching, guys.